Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 4 strong buy Dividend Kings. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 4 dividend royalty stocks that also come in with a strong buy consensus from Wall Street. Now, Dividend Kings have been paying and increasing their dividend for over 50 consecutive years, so they are a great place to look if you're wanting reliability in that dividend payment. And on top of that, with a strong buy rating, Wall Street also thinks there's room for some growth. So we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. You can learn more about these companies over on the TipRanks website or right on your phone by downloading the TipRanks mobile app. Links are in the description down below. Now let's jump right into our 3 strong buy Dividend Kings. First up today, we're taking a look at Sysco. They trade under the ticker SYY, currently priced right around $80 per share. Over the past year, they are up 12% overall and have climbed 9.7% in the last 3 months. Sysco is a leading seller and distributor of food products to restaurants, educational facilities, and healthcare establishments. They are the world's global food service leader, and their robust international network supports customers in 90 different countries around the world. They have 4 different segments to their business, including their largest, which is their broadline food distribution, their specialty companies segment, international, and Sigma. Sysco has been paying and increasing their dividend since they went public back in 1970, so that is about 54 years of dividend payments. Their current quarterly dividend comes in at 50 cents per share for a dividend yield of 2.47% and a payout ratio at 47%. Their next ex-dividend date is coming up next month on April 4th for a payment date of April 26th. Back on January 29th, Sysco did share their Q2 earnings report, and they did see an earnings beat. This was driven by increasing volumes. Their Q2 earnings per share came in at 89 cents, which was 1 cent ahead of analysts' expectations. The company said there was increased volume and positive operating leverage, seeing sales increase 3.7% and their gross profit increase 4.9% to $3.5 billion. The company also reaffirmed their 2024 guidance expectations. We did see one analyst at UBS increase their price target on the stock and weigh in following that quarterly report. They said that Sysco showed that its strategy is gaining traction alongside its Q2 results, with profitability initiatives helping it generate its 5th straight quarter of double-digit adjusted EBITDA growth. The stock is currently rated a strong buy based on 11 analyst ratings, breaking down to 10 buys and 1 hold. And the average price target comes in at $87.91, which would be an upside potential of about 9% from current prices. Looking down below at our most recent ratings, on the low end we do have a buy rating back here in January with a downside of 0.7%, and the high-end price target comes up over 14%. Our second company is one that you'll definitely be familiar with if you're involved in the stock market. That is S&P Global. Trading under the ticker SPGI, the stock currently trades at $428 per share. They've seen growth of 33% in the last year and are up just over 1% in the last few months. S&P Global is a world-leading provider of financial information services. They offer credit ratings, benchmarks, data, and digital and traditional financial research and analytical tools to the capital and commodity markets globally. They provide cross-asset analytics, multi-asset class data, benchmark prices, and more, and is a provider of information and prices for the commodity and energy markets. They also maintain various valuation and index benchmarks for wealth managers. S&P Global is a recent addition to the Dividend King list, having just achieved their 50th increase in payment last year. Their current quarterly dividend comes in at 91 cents per share for a dividend yield of 0.85% and a healthy payout ratio at 28%. Their last ex-dividend date was back in February and just had a payment on March 12th. They just shared their 4th quarter results near the start of February on the 7th, and earnings did fall a couple cents short. For their 4th quarter, they reported earnings per share of $3.13, and that did come in 2 cents shy of analyst expectations. For revenue, they saw $3.152 billion for the 4th quarter, which increased 7% year over year, and for the full year, revenue increased 12% to $12.49 billion. With 16 current analyst ratings, the S&P Global stock does come in as a unanimous strong buy. And the average price target comes in at $492 for an upside potential of 15%. Looking down below at our recent ratings, once again, we have a lot of 5-star analysts weighing in on the stock and a lot of those double-digit upside potentials there in the low to mid-teens. On the low end, we do have a buy rating with an upside of 5% and a high-end price target with an upside of nearly 24%. And our third dividend king today is a very well-known company. It is retail giant Walmart. Their stock trades under the ticker WMT and is priced at $60 per share. They've seen growth of 33% in the past year and climbed 19% in the last 3 months. The Walmart stock did recently go through a 3-for-1 stock split near the end of the month as well. Now, the company itself needs little to no introduction as one of the world's largest retailers. Walmart has grown to operate more than 10,500 stores and numerous e-commerce websites across 19 countries. They employ over 2 million associates around the world and nearly 1.6 million in the US alone. They also recently joined that Dividend King list, having passed that 50-year mark of payments and increases. They recently announced a 9% increase to their dividend, which is their largest increase in over a decade and marked their 51st consecutive year. Their current dividend yield comes in around 1.25%, and their ex-dividend date is March 15th for payment on April 1st. They shared their latest quarterly report on February 19th, and they did come out with an earnings beat and also saw some strong growth in e-commerce. For Walmart's fourth quarter, they reported earnings per share of 60 cents, beating expectations by 5 cents per share. They saw strong revenue growth of 5.7%, and e-commerce was up 23% globally, surpassing $100 billion for the year. We recently heard from a 5-star analyst at Jefferies on the Walmart stock. Their analysis pointed to Walmart's ongoing efforts to expand their sustainability goals, such as aiming for net zero by 2040, restoring significant land and ocean areas, and increasing their investments in clean energy. Walmart's plans for EV charging station rollouts and initiatives to reduce food waste and optimize packaging signal a comprehensive approach to sustainability that could lead to a lot of cost savings. The Walmart stock does come in as a strong buy based on 27 current analyst ratings, with 24 buys and 3 holds. Now, our average price target here isn't quite accurate, as we do still have some outlying high-end price targets that are on that pre-stock split price. So if we look down below, we'll get a more accurate representation looking at these more recent stock ratings that are on the new post-stock split price. They range from a low end of 0.2% for a hold here, a lot in those high single digits to low teens, and our high-end price target coming in above 16% upside. So that's a more accurate representation. As we scroll down, you'll see a couple of those that are still pre-split price with those astronomical upsides. So that is a quick look at 3 strong buy dividend kings. Let me know your thoughts on these 3 companies, which maybe already sit in your portfolio, and what one catches your eye the most. I always love hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock. Please make sure you always stick to your own investment plan. Thanks so much for watching. I hope you have a great day, and I'll see you back here next time.